Good evening. This is the Elliott Wave update for the NASDAQ 100 for Sunday, November 7th, 2021. The Globex markets did kind of gapped lower initially this afternoon. And that was on the premise that Elon Musk would sell 10% of his Tesla holdings. And it seems that with the infrastructure package passing, he has now taken into consideration that he doesn't really want to pay this new capital gains tax. And so I think he's asked his Twitter followers if he should sell 10% of his Tesla holdings. And the Twitter followers basically said, sure, sell. And I guess that's what he'll have to commit to. So that's what the market seems to be favoring. However, that same infrastructure package, which the first part got passed through the Congress late Friday night, will likely begin to do much needed repair to the infrastructure of the United States. And that's the electrical grid. That is the water grids, the supply, the pipes in many areas of our country continue to have high levels of lead being thrown into people's tap water. The electrical grid, the rail lines coast to coast, improving those, and then also putting electric charging stations. And then there are other factions of the bill which will be helping employees get themselves back to work, providing, I believe, I don't know if childcare is a part of this one, but I know that was out there. And so there's a lot of pieces to this to benefit America, benefit the country, and put a lot of people back to work, and good paying jobs, and jobs that help to promote our commitments to climate change, our commitments to, again, building up and rebuilding our infrastructure, which has been in desperate need of repair. That's our roads and our bridges and like I said, the electric grid and water supply going into a lot of different areas in a lot of different states, still being really bad. So that's all good news. How the market wants to factor that in, because it's out there in the future, it is over several years. So do you want to go now and start buying this back up to new all-time highs? Or is that portion done? We're going to go to a correction and then begin to put it in as it becomes evident as to what is physically happening to the economy, to the individual companies that will benefit from the infrastructure package. So there's still a lot of factors to be put in. Yes, I personally believe that it's a great deal for the country. It's a great deal for our economic future in terms of people having the ability to continue to afford their lives, to afford to live, to buy a house, to raise a family, et cetera, et cetera. I do believe that it's positive in that respect. And the country is in need of that happening and has been for over 40 years. So you can't ignore our infrastructure that is at the responsibility of the federal government to help provide the funds to do the repairs. Being put into place is a big deal. But now I want to interpret this through the eyes of the Elliott Wave, Fibonacci, and just how I see the market trading right at the moment. Right now, the market has a bigger problem to deal with, and that is if the short squeeze is over. And so all of these long positions. And so we'll see again, remember what I said is, with Friday's expiration occurring and volumes being high and both calls and some puts, but more on the side of the calls, how that all resolves out coming out of expiration should possibly have a stronger play in how we trade tomorrow. And that's as far as I really go. So I'm looking at the hourly chart. Now, yes, I do believe that we may have, and so I have put the 5 on the hourly chart. I've labeled it in there as 5 in the C. I'm not putting the B up yet, because I'll tell you that we still have to leave open the potential that the market might just turn on its heels and get itself up to 16,565, which was that upper level, way upper level And that still is in the picture. Although I do think that even if I'm counting that as 4 and this is 1, this is still the no break, 16,216. Well, we got only down to 256 on the opening. So it's still 40 points down. Now that could be easily reached. If you saw the opening, they just went boom, 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 boom. And then it stopped, and because everybody was done and everybody looked both ways, and then they just bought it. Now we've just had an additional little turn, but this is still going to take a lot. So here's what I would be looking for. If indeed we reached our top on Friday, and by the way, the market did get up to a new all-time high, and that's sitting at 16,448.50. And it got challenged twice. We finally was like, no, that was it. And then we just started to trade lower, and we went into the close with the rally because of the expiration. Now, if the market does continue lower, we gapped below the, actually we did close just at and below. Now we opened below the 20, and that bar closed below the 20. But it went down and broke below the 50, but then closed back above it. So that 50, it's not an official break. What would signify that it is official, that the hourly chart is broken below the 50, is that it breaks and closes. The bar closes below the 50. Not that it goes below and then retraces it back up. That would not count. I'm not sure why that's happening. And I'm not sure why that's happening. So let me just reset the charts and see what's going on here. There we go. Let me go back over here. So this is the 30-minute chart. But on the hourly, that it has to break. Now here on the 30-minute, now it already broken the 20 at last session on Friday. Now it gapped below the 50. That bar did close below the 50. The next bar went back up and touched it. That's a 30-minute bar. These are 30-minute charts. So even on the hourly, it would have gone back and it would have touched this 50, but it did and did not close back above it. So on a 30-minute basis, the market is showing some weakness. Now, that leaves all options on the table. But because we are day traders, I'm gonna read it this way because I'm trying to find out what's it going to do for tomorrow. So for tomorrow, I'm thinking that if Elon Musk starts selling his stock, or they just start selling in advance of him selling it, then the market will react because Tesla has a higher weighting in the NASDAQ, and I believe it maybe even moved up a little bit more. So it could really cause the NASDAQ to drop, fairly so. So back out to that hourly because that's the one we're watching. First thing I'm going to be looking for is if indeed the Friday's highs at 16,448 completed the B wave, then I'm looking for the development on an hourly basis of a 5-wave decline. Thus far, the best I can do is 1, maybe 2. And now we're dropping in the third. If that's the case, weakness should be prevalent. We should begin to close below this 50, start heading and continuing lower. Depends on how far they think they'll drop this Tesla stock tomorrow. And we may have to wait until tomorrow. Tesla stock doesn't trade until tomorrow morning. So that's where it all sits. And we do have these support levels, excuse me, excuse me. They were resistance going up and now they're support. So we have it. This one came into play and now it's got below and it went back above. So 275, still in play. 232, excuse me, 223, still in play. 16,167, still in play. The next, if it breaks and closes below here on the hourly chart, and it could happen in an hour. If they really get this market going to the downside, folks, we know the market can drop 200 or 300 points. That would not be a problem. The way that it has been bought up, it would not surprise me to see everyone just go, that's it, we're done. And now they have to reverse all those positions again. Now remember that when under Elliott, if we're in a 5-wave decline, if that's what's beginning, within this initial first wave, we will get what I continue to call the point of recognition. What that point of recognition is again, where a lot of traders are going to realize, oh, we're not going to go up, we're going to go down, I need to change my position. They're recognizing that they're reaching a point where they need to do that. And when that happens, this is we're going to see some changes, and it will cause some acceleration in the market. Not going to last forever, but it'll be a great little trading period. And so we need to be able to recognize this, and we need to be able to see the signs coming, and that's going to help us with the moving averages. And it starts to break down within the count. Now, again, initial 5 waves. It's not the third wave of it. It's just the initial first wave down of this larger move, if that's what's happened. And it's a major if, because we've had so much bullishness. They may just come in and say, well, you know what? Tesla's Tesla. We're going to focus on the infrastructure package, and we're going to give the president a little bullish move. Who knows? So let's be prepared for both. We can play the upside. We know how to play the downside. We now know what we can look for. If the market holds here and it just starts to break above these moving averages, and we're looking for that. And then that, we're looking for that. And then above that, we're looking for probably just some round numbers, 16,475, et cetera, 16,500, I think is going to. And then we have the Fibonacci resistance comes in much higher at 16,565. And so, as I said, for Friday's update, we cannot rule out that they'll pop it to 16,500. And we still can't. But the market will tell us instead of me telling the market. I'm just saying, don't count it out yet. Trade it. And that's going to be, if it goes up, they're going to be great moves and want to get in. If it goes down, they're going to be great moves. We're going to be in. And we know what the limitations or what the key points are going to be. If it breaks back above the 20, expect a push. If it breaks below the 50, expect a push. So this is where I'm going to leave it. Trade smart. Trade according to moving averages. Trade using the moving averages. Trade using the Fibonacci, using the Elliott. Next update, Monday, November 8th.